Hey guys, welcome to the first video in this series that I'm calling my $1 million portfolio challenge, where I'm going to take one of my $1 million stock portfolios and look at a $1 million crypto portfolio and see which one has the best risk-adjusted returns over the next few years. Basically, which one can perform the best over time. And if you guys are interested in this type of idea, I'll do regular portfolio update videos that shows things like position changes, basically if I buy or sell any assets. And then also I'll cover the news behind the moves and talk about what's either causing gains or losses in the portfolio. And so why $1 million? Well, I know for some people that's aspirational, meaning it's a good goal to shoot for. And for other people, it's peanuts. But I think it's a good starting point. And again, what the goal is to look at the comparison between a stock and a crypto portfolio and see which one we can grow the most effectively over time. And to start, let's talk about what these portfolios are and where they sit in my overall wealth machine that I did a video a few months ago talking about how I basically have gamified my wealth and the different types of accounts and strategies that I use. And to start, I want to show you the breakdown of my total net worth by asset class. And this changes quite a bit depending on where we are in market cycles. But currently, the largest asset class that I have is crypto, which is around 35% of my total net worth. And stocks make up about 30% of that. Real estate, about 15%, startup and angel investing, about 10%, metals like gold and silver, about 3%, and then currently about 7% cash. And then if we dive into the crypto portion, the 35%, in there, I've got different capital buckets, like my HODL capital bucket where I buy Bitcoin in bear markets and I hold on to it forever. Also my cycle trades where I buy low and I sell high, usually holding anywhere from 1 to 2 years. I also have a swing trading capital bucket where I'm buying dips and breakouts and very specific trade setups with risk management that's predefined. And I take the occasional day trade, but not very often. And also I have a startup investing bucket specifically for crypto companies. And in this crypto portfolio, I use a bunch of different strategies like dollar cost averaging. Like in my last video, I showed the best time and place to actually dollar cost average Bitcoin. We have bull market trade setups. We have altcoin momentum trading. We have volatility scalping. We have pre-listing accumulation. There's a whole bunch of strategies that I use to build this portfolio over the last decade. And then in the stock portfolio, this is relatively simple where it's broken down into either passive or active. And under the passive, I have my index, so like the S&P 500, HODL, which I just compound over time. I have growth and value stocks. I have managed futures funds. I invest in hedge funds that are passive for me, but again, I'm outsourcing that active to professional money managers. And then on the active side, this is where I'm either picking stocks that I want to be long-term compounders in my portfolio or momentum trading. Just like I trade actively in crypto, we also do that in the stock market as well. And if you guys are interested, I'll do more videos on the other portions of my investment portfolio, like real estate and startup investing. And if you guys are interested, I can go into detail. But for the sake of this video, I want to focus in on the stock and crypto portfolio. So let's talk about the exact portfolios that I've chosen to use for this challenge. On the crypto side, the goal of this is long-term compounding growth, meaning I want to grow this in both Bitcoin terms and USD terms over time. So I want a dollar cost average during bear markets, just like I showed you in my last video, and I'll maybe put a link up here or in the description. So for this portfolio, it's Bitcoin only. Why is that? Well, I think Bitcoin is going to outperform pretty much every single crypto over time, as it has for the last decade. We've seen many cryptos come and go, and some of them can be great assets to trade, but I very rarely hold anything else long term. And so because I want this to compound over time, I'm going to stick with Bitcoin only. And so for the stock portfolio, let's talk about what this is. Well, this is a smaller part of my retirement accounts. So it is tax advantaged where the Bitcoin account is taxable if I end up selling that. the strategy that we're using for this is called core and satellite. And basically what that means is I'm using a combination of individual stocks that I think are really good long-term growth or value stocks that are going to compound in value over time, and also ETFs that give me broad market coverage. And for you guys that have been following me in the Bitcoin space for the past 11 years, you're probably asking something like, why invest in stocks if Bitcoin has been the best performing asset for the past decade plus? That's a good question, but I want to show you some data as to why I think stocks are so important in growing your wealth long term. But yeah, if you look at this chart, you can see that over the past 11 years, from 2013 through 2023, Bitcoin was the best performing asset 8 of the past 11 years, which is amazing. And the annualized returns have been well over 100%. But here's the kicker. Drawdowns impact total returns over time. And Bitcoin has some really, really deep drawdowns, which can be great. Volatility is a trader and investor's best friend. But Bitcoin's outperformance in the future isn't guaranteed. I'm still bullish on Bitcoin, but we're absolutely more than likely going to have some deep bear markets. And what I want to do is smooth out those returns. And stocks, quite frankly, have over 100 years of outperforming inflation. And to demonstrate this, I want to show you an example comparison of two portfolios that I stole from the Stock Geek. Which portfolio would you rather own? Portfolio 1, imagine you have really big returns, 20, 30%, and then you have a big down year, and then you have another couple of years, 20, 25, 30%, and then you have another big down year, and then another big up year, followed by 2 more big up years, right? Where your average annual return is like 10%. Compared to portfolio number 2, where it's lower but smoother returns, 8%, 8%, 8%. Sounds boring, right? And much lower. And even though the average annual return is only 8%, after 10 years, the total return is actually higher with the lower returns and the less volatile portfolio. Pretty interesting, right? Here's an example of a chart visualizing this, where you can see the blue, the 8% compounded over time, is just kind of this smoother line that ends up with a bigger number after 10 years. And the portfolio that has big ups and big downs, those drawdowns actually impact the long-term total growth, even though the average annual return is higher. And in my last video where I talked about dollar cost averaging Bitcoin, I showed you how important it is to buy during bear markets and how it basically triples or quadruples your returns as opposed to just buying Bitcoin at a regular interval. If you bias towards buying in bear markets, your returns are just so much better. So let's dive into these portfolios. And what I did is I tried to match them up with roughly the same US dollar value as of today. And you can see in the Bitcoin portfolio, it's currently worth 1.151 million, and that makes up roughly 18 and a quarter Bitcoin. And then comparing that with the stock portfolio, you can see this is currently worth 1.152 million. So again, I was trying to, for the start of this, just make them about even. And you can see that the performance of this, so Bitcoin over the past 1 year is up 110% or roughly 600K, where this is up since inception, which I started this account back in between 2020 to 2022 is when most of the investments were made. So it's up roughly 10K today, but it's up 391K overall. So I put more into this stock portfolio as the Bitcoin portfolio. So again, the strategy for the Bitcoin portfolio is to dollar cost average during bear markets into the future, or just see how this price compounds with the current amount in this portfolio. And then to give you just a little more detail into how this stock portfolio is structured, you can see that I've got a mixture of ETFs and individual stocks. So the largest holding here is ITOT, which is a total market ETF. And I've also got some individual stocks like Apple, Nvidia, Amazon, Walmart. And if you look at the performance of this since inception, one thing that I really like about the Koyfin platform here is you can look at the CAGR, or the compound annual growth rate, which again, I talked about in my last video, and why I think this is just a really important metric. What it does is it smooths out the returns and it annualizes them, and it looks at your average return over time. And so the average return over time for this portfolio on the stock side is roughly about 20%. And the performance of the Bitcoin DCA strategy over the last couple of years is closer to 50%. So again, the question that you might have is, okay, well, if Bitcoin over the past couple of years has had double the performance about compared to stocks, why would you want to have a stock portfolio as well? And the answer to that is what I showed you in that prior slide, where even if you have a portfolio that has lower returns, if the drawdowns aren't quite as deep, that can actually help you outperform over the long run, right? And as investors, that really should be our goal, is not to have some big year and then lose it all like a lot of crypto degens do, but to really grow life-changing wealth over the course of many years or even decades. And so that's really the reason why I picked these two types of strategies of high quality stocks and really the best quality crypto, aka Bitcoin, to show you how this price and these portfolios can compound over time. So let's just quickly kind of dive into some of the detail on the stock side and show you what's been performing the best so far. Obviously, Nvidia is a stock that has just been absolutely crushing the last couple of years. You can see my total P&L on this is 600%. So it's currently worth a little over 100K. So, roughly 10% of the portfolio. The CAGR, so over the past couple of years that I've been holding this, it's been earning about 100% every year. So that's incredible. And that's kind of an outlier. You can see a lot of the other individual stocks like JP Morgan, AMD, Goldman Sachs, Walmart, etc. They're closer to, the low 20s or high teens as far as a CAGR goes. And then down here at the bottom, you can see I've also got some small positions in some bonds. And again, this is more so just as kind of a risk diversifier. You can see the returns aren't that great. Really what you need to look at is the total returns, because this is really just a dividend or a yield paying thing. You're not really looking for appreciation on a bond. You're just really looking for some kind of yield payout. In the case of like a bear market year in the stock market, you're still going to have some gains there. So it just kind of smooths out the risk. For this portfolio example, the $2 million-ish portfolios, I wanted to keep this very simple. And then if you guys are interested in seeing position changes or, news behind the moves, what's driving these prices up or down, let me know. Like this up, leave me a comment with any questions you have. Let me know what other types of portfolios you'd like to see. Again, I have a bunch of different capital buckets, and this is just a small piece of my overall wealth machine. And I think having a portfolio like this is something that everybody could benefit from, because the best investors focus on the long term and focus on compounding their wealth and also diversifying, right? I know a lot of people that are super heavy into Bitcoin, and that's great. But I think when your wealth reaches a certain level, I think it makes sense to try to minimize those drawdowns, just like the slide shown how that can actually lead to better results over a longer period of time. So hope you enjoyed this video, guys. Again, like it up, share it with somebody if you think they can get value from it, and let me know what questions you have in the comments, and I'll see you in the next update. Take care.